I see you over there, you little piece of corn with some butter spread on ya. The US Fed is expected to hold rates higher for longer. That's what they say. But what do the charts, evidence, and history say? What does that say? Well, I have this wonderful, sexy chart. There are 3 holding periods of the past. This one was 8 months. 8 months of holding. This was the tech bubble, by the way. They held rates for 8 months. What about right before the GFC? It was 14 months. What about recovering off that GFC low part? Here it was only 7 months. Because the economy started cracking and then we had the zombie virus. Made everything worse again. Man, what a disaster, right? Like you're recovering. Oh no. And then a zombie virus comes out, sends you back to 0. It's crazy, isn't it? So there you go, friends. There's 8 months, 14 months, 7 months. Now, why is this important? Of course, if you're new here, take a seat over there, friends. I appreciate every single one of you. Like, subscribe, belly button, or this is super important because we are looking at how the market responds to interest rates. When they hold rates, the market keeps rallying. I mean, look at this. Look at this. Okay. This is the interest rate. The white line is interest rate. The orange line is the stock market. If you notice how, look, they held rates, market kept rallying. But then when they kept cutting rates, the market crashed. Okay, that's super important. Now, if we go back in the past again, look what happens here. They held rates. That was that 14-month period here, right before the GFC. Look at this. They held rates, and look what the market did. Woohoo! We kept rallying. Now, if you want to see, I mean, this is quite some distance because it goes up for 550 days. So I know it doesn't look like much on the chart, man. That's a long time. Imagine what can happen to crypto in 550 days of stonks going up. A lot. That's a lot of friendship, a lot of kindness. That's a lot of butter spread on your corn. Here is the other one. This is the tech bubble. This was the third one, the very, very early one in that chart. They held rates up here, so they basically stabilized these rates. And look, things kept. Look, this is actually wild. They held rates. This is crazy. Okay, they held rates here, and then the market just kept shooting up, like you wouldn't believe. Then they cut rates. The market shot up. Then they hiked rates, the market went up again. It wouldn't go down. It wouldn't go down until when? Then they started cutting rates. When they started cutting rates, it was Doomtown to Goblin Town, and it was finished. So as you can see now, what's the main lesson from here? Well, as I've shown you, when they hold interest rates, the market is stable and neutral. It's like, okay, we can handle it. But then as you go through the passage of time, they eventually get wrecked. Another hiccup comes along the way. So now that makes sense, right? Now it makes sense why I want to show you 8 months, 14 months, 7 months. Because that's around roughly the time of how long we might hold the rates. Of course, anything can happen. We just have a range of numbers. You know, now they've just started. They said, hey, we're holding rates. That's it. See ya. We basically start the clock now. Unless there's one more rate hike or whatever. But we're getting towards the end of it, of course. But everybody's been saying this for a while. Now, what usually happens is a few things. Bears have to capitulate. I don't know why. They just got to capitulate. They haven't capitulated. Look around you. Everybody's still saying recession, depression, everything's going to go down. And I say those too, but I'm like, I know from the charts, you can say that all you want. The stock market does not have to go down at all. It can do whatever the hell it wants. It can price in the future. They can do QE, the insiders, the bug eaters, JP Mosquito. They know what they're doing. They know they've got to keep the stock market resurrected. The stock market's a forward pricing mechanism. So just to reiterate, holding rates is good. So if rates are sideways, it's good. If rates go down, it is bad. It's a poopy. And this chart here, this is the actual interest rate itself. You can see it went down here and then zip right up. So we are back to what they call normal. But just to let you know, normal is different now because normal is not the same as it was because you have a different level of debt to GDP. There is about 130% debt to GDP here. And then back years and years ago in the 1980s, it was only 30%. So the debt to GDP ratio has been going up and up and up and up. There's just a lot more debt. It is a chain around everyone's necks in the economy. Mr. Richard's brother says, I don't even know what any of this stuff means. I learned crypto and I never bothered with this outside stuff, people. let me just reiterate to you. When the Fed holds rates, the market goes balanced and it starts to rally. When they cut, be careful. So if if we enter, friends, into a period of euphoria and we go up and then we're like, oh, the Fed's cutting now, and let's say it's like June 2024 or anywhere sometime next year, that's not a cause for leverage, okay? That's not a sign to say, okay, the Fed's cutting rates, let me go put on leverage, because a lot of people will. A lot of people will, and they'll get destroyed. But I'm to tell you, no. So if the very least, if you're not going to get short and you're not going to sell into stablecoins, please don't do any leverage at this point. Don't think, okay, now this is the sign to pile on, because you don't know. So when that collapse happens, we don't know. If say that collapse happens here, you don't know, is Bitcoin going to go back down to 26K? Is it going to go back down to 28K? Is it going to stop at 37? You know, is it going to go sideways? That's what you don't know. And that uncertainty can kill you if you are leveraged. And so even Dennis is asking, how on earth are rate cuts bearish? Now, I've explained to you. They always cut the rates when it's too late. The economy's already slowing down. It's a very slow-moving ship. When the Fed cuts rates, it's the same as pressing your car brakes, but only after you've already hit the tree. That's how delayed it is. It takes time for the rate cuts to take effect. It takes like 12 months. So by the time they start cutting, they're like, ah, crap, it's over. This is also a cause for concern. The number of times that they mentioned a soft landing has skyrocketed. Look at it in the media. Wow, it's gone parabolic, soft landing. Now what? Soft landing is opposite to a hard landing. A hard landing is a very tough recession where the unemployment rate goes up really high. A soft landing is like, oh, you know, we got a bit of a hiccup, but we made it through. It's funny. It's why I told you, to get this, you got to make the bears capitulate every time. You got to make them give up. You're like, that's it. You've got to literally believe the new bull market's coming. Look at him right here, right here. This was 2000, by the way. This is, look at this. See these bubble pops? This is insane. This is GFC. This is the tech bubble. Look, the harder they say soft landing is like, uh-oh, it is really over historically. And it's very important to track this. So I always mention here, it will be hard. That's what she said. That's exactly what everyone's expecting now, because it's just like, there's just too many things saying they've done the wrong things. Don't forget as well, they have delayed Mt. Gox Bitcoin by 1 year. It's crazy if it all comes out together. I mean, wouldn't it be wild if in 1 year from now, the Fed is cutting rates, things are calming down in the economy, and Mt. Gox releases its coins? Man, that'll be pretty much of a poopy scenario. This is also an important chart to check. Look at this. Personal savings going down, down, down. Look how much personal savings went up when they printed money during the zombie virus. Now, everybody has depleted it. They got nothing. That's why, you see, look at this chart, friends. Look how low we are now. We could have deflation very soon. A lot of people still assume, oh, the inflation. Like, this is what, okay, we live in the future, friends, here. Okay, what do newbies do? Newbies invest based off how they feel today. If you're kind of going to make it, you're an average person, average winner, you'll invest based off yesterday. So you'll try to look at the trends, that what happened in the past. Like, oh, they might continue, and that's okay. But the moonshots, the giga moves, the professionals, they're actually always looking into the future. They're looking at the future. We're trying to investigate how everything is going to play out. You never really know, of course. We're just trying to guess. And I know one thing. Consumers, not very good at estimating beyond like 6 months. I 100%, all the stats show that. No one knows how to do anything beyond the next 6 to 12 months. They say they do, but they're very, very bad at predicting. So all the people who said, oh, we're fine. We might find as 2024 rolls in that everyone's like, oh my God, I'm actually bankrupt. I have actually no money. And you're wondering like, wait a minute, you said you were doing fine for the past 2 years. What happened? That's what's going to show up in the data with like very low CPI. And then we're going to wait and see how the Fed responds to that. I also found this very fascinating, right? This is seasonality, okay? Not chicken seasoning. So it's interesting. Okay, so what they do is they say they split up all the seasons of the year and they just get the average price of how everything moves. And it's interesting how the market has an average line. And what you can see is this is Bitcoin of like this year. And the line under it, the faint line under it, is Bitcoin of the seasonality. And it's wild to see, friends. It's very wild to see. You can actually see right here. Bitcoin, this is, look at September. Every year, this is priced in September. September's trash. It's just garbage. And then look, October is up only. See, that's all Bitcoin history. September is garbage, up. October's up only, and then you finish good at the end of the year. Also, it's funny as well, January and February is an up every year. And look, this is April. If you notice, April is one of the best months of crypto in the year. So I think the actual best month is October, November, and then April comes right after that. So, but it's seasonality. You think this should matter? This shouldn't matter at all, but apparently it does. So what can you actually gather from this? Well, it's wonderful to know cycles keep working. Cycles keep working, and as much as we try here to predict, you know, we're going to get scammed somewhere, is Roca Negra going to come in and try to backstab us? They're all possibilities. But at the end of the day, if the market goes up, and it's still possible that the crowd is very bearish. It is possible. You've seen it. We saw that at the beginning of the year. We saw Bitcoin go up and people stay in this belief. So how do we actually get this? I got asked this many times, and this is super important to know. If your market resets a lot, you never end the party, okay? You literally never end the party. So if you're constantly doing this, like bang, 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 like this, it never ever ends because you always keep wiping out leverage. But we know markets don't do this. They get ahead of themselves, as you can see what happened in Bitcoin, right? This, okay, like, oh, okay, we're wiping out, and then like, zzz, you see that? Everybody's like, yay, never end. We always get these periods of where everyone's just like, oh my God, the wiping out stopped. I mean, you can even see the wipeouts get like, you know, wipe out. And then look what happens. Like we start this 2017, like no more wipeouts. That's actually towards the end of it. It actually does mark the end. So it's possible, you know, we go up, we wipe out. We go up, we wipe out. We go up, it is possible this happens. It's just how likely is it? Well, we get to see. If there are nefarious actors like the government who want to sell stocks, if there are other hidden, evil, shadowy people, reptilians who want to exit, they need euphoria in there to maximize their buck. Because if they just leave everybody in here growing organically, then they can't attain more power. You can't attain more power in this if this happens. So, but does the market even let us do it? Is there a mathematical formula? That is something we'll never know. But I just want you to know, as convicted as we are that, yeah, there might be a scam somewhere, don't forget there is still that possibility that, you know, we get to certain parts and we just have such a deep rinse, then we just feel forced to be bullish again, you know. That's why I did mention, if 2024, let's say we go up to 50K, but then we finish 2024 like trash, I'm going to be like turbo bullish for 2025 and probably maybe even 2026, just because we had a big rinse. So you become more in a dangerous spot when euphoria is here and you haven't rinsed people. And you'll know it, friends. You'll know it by the rinse. You'll know when everybody starts partying, because people only start partying when they like are very far away from the rinse. But if people are always nervous and schizophrenic, you know that everybody's cautious and there's actually a lot of room for the market to go up, not down, up. It's because everybody is super cautious about entering and spending and doing everything. That actually is fuel for the bull market. It's when everybody forgets that there's ever a bad time. That's the end. But not the end of our friendship. Make sure you like, subscribe, bell button, or tell mum and dad we love and appreciate them. We are going to have some corn tonight. I'm going to catch you next one.